Hey everyone, Steve here from theturtlefollower.com, and in this video we're going to take a look at a trade that we made in Rockwell Collins. Now this trade spanned about 140 to 150 days in the model portfolio, and before we even get into it, I just wanted to show you what the trade looked like, eventually how we closed it out, and then we're just going to go through step by step, and you'll see how we let these trades run, okay? Because in the free videos every night, we go ahead and we identify some potential setups, but we really never go through how to manage them. I kind of leave that for the premium side. So this is a little bit of a look in to see how exactly I manage these trades, and this is one that we have for the model portfolio, returned about $800 for us in profit, just about 1.4 R. So again, this is the trade setup on the daily chart. Okay, you can see that right here. And we had this set up that really it was consolidating for a period of about 2 to 3 months until it finally broke out on earnings back here on the 23rd. That was our entry signal. And at that point, we had the option of using two potential stop areas. The first stop area was 81.12, so call it 81. The other one was 83. Now, we were a little bit more conservative at that point, and we used the 81.12. We sized the position accordingly using the 81.12, because at that point we knew that we would have to break these lows, this low, and the trend line, okay? So, and the 50-day. All right, so that's how we used that 81 level. You could have used either one in this case would have worked, but ultimately we used a little bit of a wider stop because we wanted to be in it and we wanted to go ahead and potentially add to the position, or just make sure that we were in it for as long as possible. So shortly after we entered, pulled right back to trend line, and that was really all it needed. Then it had this nice run that it put in, where it ran from about 85 until it topped out right around here at 99. Okay, and now with that, you can see that what we essentially do is we don't predict where this is going to stop. We don't have any idea where it's going to stop, if it's going to be a winner or a loser. Ultimately, we just let the trade identify itself, let it identify levels, and the fact is we're in it. Okay, so we're in it small enough that it doesn't matter if it becomes a loser, but we're in it large enough that it works out for us and gives us a nice gain if everything works. So as I said, pulled right back and then it ran. Okay, so at that point when it started running, we started trailing stop up to 83, and then eventually again to 85.35. You can see here it identified a new level. All right here at 88.50, another one at 90.41, and then again here at 92. All right, so each one of these pullbacks is a potential area, and what we do is, as it pulls back and we get these nice potential swing lows, we identify these areas, and then when we get breakouts through the highs, we then either trail stop or add to the position. Again, similar situation. We've got a little bit of a pullback, swing low, broke through the highs, move the stop up. All right, came up, pulled back, swing low. All right, and this one kind of consolidated a bit, finally broke out, move the stop up, add to the position. And in here, our last and final ones were, the reason we added to these was because now the 50-day moving average was below both of these levels. So we knew if we broke the 50-day, we would also be breaking this 95.50 or 94.67. That was the reason we moved. So essentially we got in the position at the open, which is 87.82, and we got out at the close after we broke down below our previous stop of 95.58, and we got out at the open the following day, which was 95.25. So just about a $7 move in the stock, and that's what. So that was how we let positions run. All right, so it's actually a lot easier than a lot of people think. A lot of people make it hard. It doesn't have to be. Ultimately, you're really just identifying swing lows and breakouts. Okay, and as you get new breakouts, you can add to your position. All right, so for instance, on this move here on the 3.9, we could have added to our position, trailed our stop up nice and tight, 88.67, then look at reevaluating where we're at and potentially putting on the full 0.5% risk that we use in the model portfolio. Any of these breakouts, you could have done that. So at the end of the day, we probably could have had a bigger gain if we were consistently adding to it as we moved higher, but we were pretty conservative with our stops and we just let it run. And that's really the way it works out best. You don't have to be a rocket scientist to figure this out. You just have to look at the chart, identify these swing lows, and that's how you let these positions run. So I hope that was helpful to you guys. Any of your questions or comments, please leave them below. I'll be happy to answer them. And if you're not a member of the premium side of things, I really highly recommend you do so. We're turning out decent performance for the year. We've had a little bit of a choppy action, but the fact is we're learning a process that we can stick to for the rest of our lives. And you know, the market's always going to be there as long as we can kind of hone our skills, hone our system and our process that we use. You can, you know, effectively take money from the market every single year, you know, and again, learn a life skill. So highly recommend you guys head on over there, check that out. And again, any questions or comments, leave them below. We'll see you tomorrow. Thanks for watching.